All right, today we're putting on our detective hats. We've got our hands on a technical analysis report for Beyond Meat, stock symbol BYND, and let me tell you, it's a real puzzle. It's packed with clues, some serious contradictions, and one central mystery. So, our job is to deconstruct this thing piece by piece and figure out the story the data's actually telling us. Let's get into it.
So here's our game plan. We're going to start with the final verdict from the report. Then we'll investigate the absolutely chaotic scene of the last 3 months. After that, we'll hunt for clues in the long-term trend, we'll gauge the current momentum, analyze the standoff happening right now, and wrap it all up with the one big question this whole investigation leaves us asking.
You know, in any good mystery, sometimes the best place to start is at the end. So before we get lost in the weeds, let's look at the single most important number in this entire report, the final score it gives the stock.
And there it is, 87.45. This is the technical score the report gave BYND on December 3rd. Just look at that for a second. That number is the mystery we have to solve. What on earth does it mean, and how did this stock get a score that high?
So what is a technical score anyway? Well, you can think of it like a final grade for a stock's technical health, all things considered. It's on a scale from 0 to 100, and a higher score means the stock looks stronger from a technical point of view. Now, a score of 87.45 isn't just good, it's really, really strong. And for a stock with the kind of history we're about to see, a score this high isn't just a rating. It feels like a contradiction. And that's the puzzle we're here to figure out.
To even begin to understand that score, we can't just look at a single moment. We have to go back in time. We have to investigate the scene. And for BYND, the last 3 months weren't just a scene. They were a financial earthquake.
You can almost break this story down into 3 dramatic acts. On October 16th, the stock hits absolute rock bottom, a 52-week low of just 50 cents. Then, less than a week later, on October 22nd, it just explodes to a high of $7.69. And by the time our report comes out on December 3rd, it's all settled back down to $1.29. This isn't just normal stock movement, this is pure chaos. Now, to really appreciate how nuts that is, let's just rewind and look at what a totally normal, kind of boring day looked like before the storm hit. Back on September 25th, the stock's price moved a grand total of 16 cents all day, and about 2.4 million shares changed hands. Just a very typical, quiet day. Okay, now fast forward to the peak of the frenzy on October 22nd. The price didn't move 16 cents, it swung over $5 in a single day. And the volume? It wasn't 2.4 million shares, it was 2.2 billion shares. That's almost 1,000 times the normal activity. This is the explosion at the heart of our entire investigation.
So let's just put a pin in this. In the span of a single week, the stock rocketed up over 1,400% from its low point to its peak. That kind of volatility is the backdrop for everything else we're about to look at. This is the wild environment that produced that really high technical score.
Okay, so we've surveyed the chaotic scene. Now, as detectives, our first step is to start looking for real clues. And we're going to start by zooming way out to look at the big picture, the long-term map of where this stock has been. And to do that, we use tools called moving averages. The 2 main flavors are the simple moving average, or SMA, which is just what it sounds like, a simple average over time. And then there's the exponential moving average, or EMA, which is a little smarter, because it puts more weight on what's been happening recently. So let's see how the current price stacks up. On the date of the report, the price was $1.29. But look at this. It's trading below the 50-day, the 150-day, and the 200-day averages. And not by a little bit. It's way under. And this right here is our first major and kind of confusing clue. Because even with that insane spike we just saw, the stock is still trading way below its historical levels. This tells us that the bigger underlying trend has actually been bearish. It's been heading down. So how in the world can a stock with a bearish long-term trend get such a high technical score? The plot thickens.
So if the long-term trend is bearish, maybe the answer is in the short-term energy. We need to measure the momentum. You know, is the stock running out of steam, or is it coiling up for its next big move?
And our main tool for that is the Relative Strength Index, or RSI. Think of it like a momentum gauge from 0 to 100. The basic idea is that a reading over 70 suggests a stock is overbought and might be running too hot, while a reading under 30 means it's oversold and might be due for a bounce. So where's the RSI for BYND? Well, it's sitting at 50.09. That is almost perfectly, mathematically right in the middle. It's not hot, it's not cold, it's just neutral. A neutral reading like this suggests the market is just holding its breath. After that massive explosion up and the crash back down, the buyers and the sellers are now in a perfect standoff. It's a moment of pure indecision. This is the calm after the storm.
But let's dig a little deeper for a more subtle clue. This is something called the MACD histogram. It's another key momentum indicator. And look at that. Its current reading is a small but positive 0.065.
Now, this is a really interesting little detail for a detective. Even though the main momentum gauge is neutral, this positive MACD reading can be an early hint that some bullish energy might be quietly building up under the surface. It's a very subtle clue that the balance of power could be starting to shift. Okay, so we've got a bearish long-term trend, but we also have these subtle whispers of bullish momentum. And this brings us to the present day, to the battleground where these two opposing forces are meeting head-on. This number, $1.21, is the floor. It's the immediate support level. Think of it as the defensive line where buyers have recently shown up and said, nope, the price is not going any lower. And this number, $1.40, is the ceiling. This is the immediate resistance. It's the price where sellers have stepped in and stopped any rally dead in its tracks. The entire battle is happening right now between these two levels. So let's lay all the evidence out on the table. We have a crazy high technical score. We have a history of absolutely mind-bending volatility. The stock's price is way below its long-term trend lines, which is bearish, but the momentum is neutral with a little bullish whisper from that MACD. And the price is currently locked in a tight 19-cent range. The clues are pointing in every direction at once. And all this brings us to the end of our investigation, but instead of a nice, neat conclusion, all this conflicting evidence leaves us with one final provocative question, an unsolved mystery. So, when a stock's recent past is a hurricane, but its present is eerily calm, what's a detective to think? Here's the theory. That high score, that 87.45, seems to be betting on the potential energy. It's looking at that incredible volume spike and that tiny bullish signal from the MACD, and it's concluding that this quiet period isn't an end, but maybe a moment to gather strength before the next big move. The long-term trend is bearish, yeah, but that recent explosion of activity is a clue that's just too powerful to ignore. The final unsolved question, then, isn't if another move is coming, but simply which way.